Let's get back to one of our top stories of the day. Robinhood filing to go public. Here to talk more about Robinhood and potential challenges that the company could face once it goes public is someone who knows retail trading inside and out, Interactive Brokers founder and chairman, Thomas Peterffy. Thomas, do you welcome more competition? And do you think Robinhood is a good thing for society and for young people in general?
Absolutely. Robinhood is a terrific thing. I mean, bringing 18 million people into the marketplace who otherwise would not be here is just a fantastic accomplishment. It is a great service to this country. I think that so many more participants in the marketplace will be just fantastic. I understand that, yes, probably most of them are not going to do well at the beginning, but some of them will learn and become educated about the economy and how companies work, and it's going to be fantastic for the future of this economy.
Any concerns about the growing pains that Robinhood will need to still go through? Because we've seen some examples in the past 6 months, some regulatory steps that needed to be taken, and definitely some missteps from that company. But is that all just part of a new and growing concern, doing some innovative things?
Well, obviously, when you're growing so fast, things happen. And so I think that this is going to be one of the greatest meme stocks of the future, because basically they have no, I looked at the filing, they have no equity, they have negative equity, they have roughly zero earnings. So it is, but that's the kind of thing, and they are growing very fast, so that's the kind of thing that the market seems to like lately. So I'm really looking forward to them coming into the community, bringing more and more people into the market. It's for Interactive Brokers, this is very beneficial because we regularly get people. So it looks like that many of the folks that come in basically don't do very well, but the ones that do eventually are looking for a more serious broker. So we get roughly 10 new customers every day from Robinhood. And okay. But I think it's a fantastic way for people to learn about how the economy works. It's great.
We always say that we welcome competition anywhere, and that's a prime example of how it works. That you're picking up some new customers based on what's happening. The demise of the meme stock per se was greatly exaggerated. Most of those stocks are still trading at way higher than they started. So just overall, that is it. That's healthy. Is it unhealthy for the democratization of the market?
You know, it basically demonstrates to people. You know, I've been in the market for 50 years, but it's just you can never figure out what's going to happen. So I think overall it's very good for the market that crazy things like meme stocks happen. But so you have to be careful when you're shorting. You have to obviously. So as far as Robinhood is concerned, the payment for order flow is an interesting question that will come up. And, you know, I read that they just dropped their margin rates from 5% to 2.5%. Now that is still about twice as high as what Interactive Brokers charges. They have 2,000 employees. Okay. Well, you know, the rule in the industry seems to be that you need about one customer service person per 1,000 accounts. So based on that, they would have to hire 18,000 more people. So I don't know how.
Yep, but it will be fun to watch and interesting. We'll come back to you as all these issues come to the fore with Robinhood. And get your comments. Look forward to them in the future, Thomas. Thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.